Hi everyone, this is Michael Kramer of Ma Capital. Today is Tuesday, June 24th, and it's around 6:45 New York time. So it's not going to be a terribly eventful end of the week. We do have some treasury auctions. The 2-year auction today went well. Tomorrow we'll have a 5-year. Thursday we'll have a 7-year. We'll be getting final GDP readings on the 26th, and then we'll be also getting jobless claims on the 26th. And then on the 27th, we'll be getting core PCE. And later that morning, we'll be getting University of Michigan final reading. And then before you know it, we're going to be in the month of July. And we're going to be getting all that job data that we usually get on the first week of the new month. So lots of stuff happening towards the end of this week, and a lot more stuff coming on the first week of July. And we'll be looking forward to going through all of that with you. At least when we start off with markets and we just take a look. Last week we were talking about the euro, and we were talking about how it was getting really close to potentially breaking down and it needed to hold this trend line. Well, the good news is the trend line held. We managed to hold on to support. We can see the RSI is still clearly heading higher. And what this suggests to me is that the euro is likely to continue to strengthen. I think there's a good chance that we're likely to surpass this 115 to 116 range and move all the way back up to this 119 area. It seems like that would be the next reasonable area for us to go to. That would take us back to the fall of 2021, and that's been a pretty impressive recovery for the euro, when at points in time a lot of people, including myself, were looking for it to go to parity, and so this has obviously been a big change in trend. Also, the British pound has suddenly come back to life. You can see the last couple of days it's bounced back right off of support at this 134 region. RSI clearly still moving higher. There's still some more work that needs to be done, potentially to get us the momentum really shifted again, but it looks like it's repaired itself pretty meaningfully. And with that, we're looking at right now for an opportunity to get above this 137 level. I mean, if that can happen, I don't really see why you couldn't go back into the 140s and return to levels not seen since 2021. When we look at the Japanese yen, that's also starting to show signs of improving. You can see that it broke a uptrend as well, came down pretty hard today. Looks also like the RSI is getting close to breaking an uptrend as well. So at reset right now, a move back to 142.5 seems like a viable option, and it could result in further strengthening of the yen. This has obviously been a real sticking point for the yen since the middle of May. We need to see a break below this 142 area to really get a shot at this 140 and potentially move even lower than that, because that would be the fourth such attempt. And at least right now we're starting with an RSI that seems reasonably high enough that it could result in that test coming sooner rather than later. Gold broke an uptrend the last 2 days. You can see it also broke the RSI. And that's interesting because we're seeing the dollar weakening and we're seeing gold weakening. And that could be a sign more of, gold, the safe haven trade kind of wearing out, given the tensions in the Middle East have settled down. It could just be a sign that maybe the gold is out of momentum, reaching kind of a level where there's an even natural number of buyers and sellers. But for right now, I mean, gold clearly broke an uptrend, and we need to respect that. And we also need to respect the fact that it's sitting on support at 3330. And if it breaks this 3330 region, there's no reason to think it can't go back to 3230. I mean, this really was a nice trending channel. And so the fact that it's broken has to make you favor the downside and a potential move to 3230 or so. I mean, obviously, if support holds, I think resistance probably lives up in this 3370 area. So I think the upside is probably more limited at this point. So oil has certainly seen a lot of volatility the last 2 days. And, sure enough, where do we find ourselves? Pretty much around that $66 a barrel area, which has really been a really big sticking point for it for some time. We got all the way up to this, call it 78 area, 79. It looks like the high was 77.10. So we kept really close to 78. I know we were talking about it going to 81, but at least for now, that seems to be not the case. And I think for right now, we need to see where oil really settles out. Is it going to go down further? Is it going to break and come back down to the lows at 55? Or is it going to just kind of settle out again in the $66 a barrel area? I mean, you can see that the downtrend, the uptrend is broken. but we are trying to turn a little bit higher here. So we'll just keep an eye on this and see. It looks to me like 66 is probably where this is going to settle out, because that's where has settled out a lot in the past as well. The DAX has managed to get above resistance at 23,360. And right now we're trying to see if it gets above 23,750. Here's our RSI, and it's clearly turned lower. And right now we're trying to kind of really figure out where the momentum is in the DAX. You can clearly see the rising triangle that broke, and we came all the way down to a support region, and now we're starting to move back up. So at this point, it's not really entirely clear which way the DAX wants to trend. And we can argue and say that the trend has been broken on the uptrend, and you can clearly see on the momentum side that's also been broken. When you look at it from this perspective, you can see the 20-day exponential moving average is support, and you can also see that we're just one bar above the 10-day exponential moving average. So I would say at this point, the trend is lower, given that we're below the 20-day moving average. And I would say that if we're able to get above the 20-day moving average, get above resistance at 23,750, that there's a good chance we're going to return to the highs that we saw up around 24,000. And if we can't, then we're going to be looking to see if the DAX can take out the low from the 19th and move lower still. The FTSE also has been looking fairly weak. You can see it's turned down. You can see it's also below the 10-day exponential moving. It's below the 20-day moving average. So it's below all its moving averages of trend, suggesting the trend is lower right now. It had this really nice move up. And so right now, again, we're kind of waiting to see if this is going to break 8,700. If it breaks 8,700, we're probably looking moving back to 8,500 or so. If it can hold 8,800, then I think your upside is limited to your Bollinger Band at 89.02. When we swing over to the NASDAQ, it had looked like the RSI was rolling over, and suddenly in the last 2 days, things have changed. You can also see that right now the NASDAQ closed above its upper Bollinger Band. So it may very well be the case that the NASDAQ is getting into an overbought condition. I wouldn't say it's quite there yet with an RSI of just 66, but I would say it's close. And so I would pay attention to that, that it's already potentially overbought. You can also see that as of right now, we're flirting with the all-time highs on the NASDAQ 100. So we've made a pretty big recovery, and it looks like instead of consolidating in price, we consolidated through time, which is always a possibility with a rising wedge. And for right now, it looks like the big challenge is going to be whether we can clear, this big area of resistance. If that clears, and there's really nothing to say, maybe the NASDAQ doesn't start heading towards 23,000. If we can't hold that breakout or attempted breakout, then we're talking about maybe coming back down to 21,600 again. Again, there was a really strong opportunity for the NASDAQ to turn lower, and it looked like it was going to a couple of times, and each time it managed to hold together. When you look at the S&P, it's also very similar, where we had a rising wedge pattern. We could have consolidated by coming down, and instead we consolidated sideways. We just kind of traded around the 10-day exponential moving average. We held the 20-day moving average. We clearly are now trading above the high from June 11th. We still have a little bit further to go to get back to the all-time highs, although I would say we're very close at this point. You can also see that we're already in an overbought situation based on the Bollinger Band. So this is a really tough spot. Again, if we can get through this upper Bollinger Band and resolve this overbought condition, then I would say your next level of resistance comes at the old highs at around 61.50. If for some reason you can't, then I would look for a return back to the 20-day moving average at 59.70. And finally, we'll look at the Dow. Again, the Dow also was kind of rolling over, although the RSI doesn't look as recovered as it does in some of the other ones. Also trading at its upper Bollinger Band already, trading above the 20-day and the 10-day exponential moving averages. So, again, these U.S. markets already sort of look almost overbought, and it's not that they can't go higher still. It's just that they're going to probably have a little bit more of a tougher time given where they are technically. The Dow has a lot further to go. Obviously, that's because the weightings are very different in the Dow than they are in the S&P and the NASDAQ, and resistance is firmly at 43,900. I think from the downside, on the downside, we're probably looking around 41,800 or so. Anyway, I hope you have a great rest of your week, and we'll see you soon. Bye.